All right, folks, back here with part 2 from chapter 3. So here you go. Chapter 3, question number 1. Don't forget to write these down for your quiz. What type of accounting do we focus on in ACC 2270? Okay, so go ahead, write down your choice, and then you're going to be able to put that in on your quiz. That's going to be up on Canvas. Okay? All right, next thing we're going to take a look at here has to do with how you do reporting revenue. Okay, so it could be a little bit confusing, but what they're getting at here is when do you actually earn the money from selling something? Okay, so let me go through the steps and then I'll explain it to you. So first one here is identify the contract. Okay, so I get my pen turned on here. Pen, go to blue. Okay, so identify the contract. By the way, there's not always a contract. When you walk into Walmart and buy something, there's not. So this is for when things are a little bit more complicated. The next thing, identify the seller's obligations. Okay. Third thing, determine the transaction price. Allocate the transaction price to the obligations. And then recognize the revenue when the obligation is satisfied. So let me explain to you what that means. Before I mentioned to you guys about you buy a computer and you buy a 2-year warranty and you buy a service plan, right? Well, the day when you buy the computer, that's when they've earned the money for the computer only. So the service plan or the warranty or anything that's going to happen in the future, they don't actually earn that money until the future, okay? So that's what they're talking about here. And so what you have to do is you have to allocate that money. Now, sometimes it's obvious because they give you the price of each item, and sometimes it's not, and you have to allocate it as kind of like a percentage. It's not that difficult to do, but just understand you don't count it as revenue until you've actually earned that portion of the money, okay? Now, if you walk into Walmart, I don't know, you buy a pair of jeans. You walk in, you grab the jeans, you go to the counter, you pay for them. That's it. The process is over with, okay? This is for when things get a little more complicated, all right? So here they're going to show you, so here, for example, here you got case A, cash before the sale or service. So what happens is the cash is received and then the promise is given. By the way, they show here, this is a gift card. So for example, when you go buy a gift card, the company you buy the gift card from, they have your cash, but they didn't earn that money until the gift card is used, right? So what happens is they have an asset that goes up and they have a liability that goes up, but they don't have any revenue yet. By the way, I give an example here, Delta Airlines. You pay Delta for an airline ticket 6 months from now. Yes, they have your money, but they haven't earned the money yet, okay? So then what happens, notice over here, once the promise is fulfilled, the service is given, they've flown the plane. Then that liability gets reduced because they've done their job, so this gets rid of this, and now they count it as revenue. Okay. The second one, cash with sales or service. This is revenue reported right away. Like I said, retail. This is like Walmart. Walmart, Harris Teeter, okay, Target, all those, right? You walk in, you pay, they get their stuff. Now the second one here is the sale or service before and asset after and cash after. This is when you bought something on credit and you get paid later and you pay them later, okay? So in that case, right, the right is received, the service is given, so they count the revenue right then, even though they didn't get the cash. So what that would mean, let's say you're a plumber. Say you're a plumber and you walk into the plumbing company, plumbing supply house, and you need to buy some stuff to work on a house, and you spend $500. and they say, okay, sign here, and you pay them later. They've actually earned their money. You have those parts, right? So they count it as revenue right then, even though they don't have the cash yet. Okay? So there you go. That's the difference. So that's what you have to know about when to count things. Okay? By the way, expenses are somewhat the same way. Okay? Notice here it says, record expenses in the same period as the revenues for which they can be associated. So remember, the idea here is we want to know what expenses did we have, what matching them to the revenues that we made. Okay? So look here, it says cash before expense. So here what they're saying is we pay cash for supplies. So let's, for argument's sake, say that UNCP goes out and they buy a bunch of stuff from Staples, right? So what winds up happening is they put that in stock and then later on they use it. So here I give an example. Let's say somebody was a deck builder, right? Oh, where's my pen here? Can't see it. Oops, go back. Where are you, pen? Oh, there you are. You're a deck builder, okay? So you bought $3,000 worth of wood to build a deck, right? So here's what would happen. You put it in inventory, wood supply 3,000. That's an asset that's increasing. And you got cash, an asset that's decreasing because you bought. So this is basically an inventory, right? It's an inventory. Now, later on, you use that wood to build a deck. Then it becomes wood expense. So what happens here, it comes out of supplies and goes to expense. Think of it like inventory, okay? And so what winds up happening, then you use it, okay? Cash with the expense, you pay cash when the electricity is used, you pay right then. And then it says expense before and cash after, okay? So in this case, what winds up happening is you wind up, let me give you an example. You wind up signing a contract for some type of advertising or something like this, and then as they're used up, they become paid for. So in other words, you sign like here, you sign an advertising contract for $2,000, and then you have an account payable, right? Then as the advertising is done, what winds up happening is you get rid of the account payable, and then you pay the cash, okay? All right, so remember the whole idea here is to put it in the same time frame. All right, question number two for chapter 3. Make sure you write it down for your quiz. What is the general purpose? Why do we use accrual-based accounting? Okay, so hopefully you've got that hint here, and obviously you could have read about it in the book. So there's a reason we do this. Okay, there's a reason we do this. All right, learning objective 3. We're going to take a look at journal entries, equations, and T accounts, just like we did in the other chapter. Okay? All right, so by the way, notice this expanded framework. Okay? By the way, when I was in your shoes, I really didn't get this. So I think it's important now that you do get it. It makes life a lot easier. So this is the accounting equation right here, right? Assets equal liabilities plus stockholders' equity, okay? And there it shows you which side they increase and decrease on. And remember, dead clerk. That's the acronym to remember, okay? Dead clerk. So now within stockholders' equity, there's two parts. There's common stock. That's when you sold stock the first time. And then there's retained earnings. Retained earnings are from when you've made money, but you didn't pay it out as dividends. Now, what's attached to this? Notice here, we got revenues, we got expenses, and we got revenues. You know what that's from? This is really right here. This is the income statement. That's the income statement. So that's where the income statement flows through into balance sheet, flows through right here through retained earnings, okay? By the way, like I said, when I was taking the class, like you're taking right now, I didn't understand that. Somehow I managed to get through. But for you guys, if you understand that now, that makes it a lot easier. Okay? All right, here we go. Question number 3 from chapter 3. In accounting, what does debit and credit mean? Now, hopefully, if you watched my debit credit video, you will know what it means. I was very explicit. All right, question number 3. Don't forget to write it down for your quiz. All right, folks, that's part 2. We'll be back with part 3 in just a moment.